Hey guys, what's up, how's it going? My name is Rob and welcome back for another video. And in today's video, like usual, I'm going to be giving you guys an update on my portfolio, and I'm going to be showing you guys which Canadian stocks I'm kind of looking at today and what I think are good buys inside my portfolio for this week. Now, if you guys are brand new to the channel, or if you just want a quick little update on what I'm doing here, basically what I've been doing, like countless others have been doing on YouTube as well, is trying to build a dividend-based portfolio from scratch. And I'm showing you guys along the way by giving these quick little updates for you guys on a weekly basis, how the portfolio is doing. So we started the portfolio in 2020, the early of 2020, just before the big pandemic hit, and the portfolio has just been growing pretty steady on a regular basis. And at the end of the day, we're focusing on dividend growth-based stocks, and we're focusing mostly on Canadian stocks with a little bit of US stocks sprinkled in there as well. And it's been a pretty cool and exciting journey. And if you guys know me since the beginning, I've been learning a lot, and I've really come a long way since when I first started this channel. So I just want to say a big thank you to everybody who watches the channel. It really makes a big difference and it keeps me going. And it's been quite a fun journey. And you know, the portfolio has kind of been a reflection of that, and just kind of shows you guys that you don't need to be super smart. You don't need to be super analytical to like get started with investing with stocks. You just need to follow some basic fundamentals, and that's kind of what we focus on this channel. Alright, so before we jump in the portfolio really quickly and I show you guys how our stocks are doing, I just want to say really quickly that if you guys want to sign up for Wealth Simple Trade, there's some cool offers in the description of this video. There's some affiliate links if you guys want to use them. You can get some free bonuses for signing up to Wealth Simple Trade. But other than that, guys, while you're down there, please be sure to hit the like button and subscribe to the channel if you guys want to follow alongside. It really helps the channel out. But other than that, let's jump inside the portfolio and let's see how our stocks have been doing for the past week, the past month, and our all-time returns. Alright, so like usual guys, the first thing we're going to be focusing on is the growth of the portfolios. I like to do these updates on a weekly basis so you guys can see how our portfolios are growing. So we have two main portfolios that we focus on this channel. We have the TFSA, which we started, which is now full, and we have the personal account, which is an extension of the TFSA because we ran out of contribution room. And these two accounts added up together have $35,000. So that's $35,000 that we've been able to grow the portfolio, and I've just been investing as much money as I've physically can into this portfolio to grow it over the past, I guess, year and a half now. It's been about, I think we're on month number 18 inside the portfolio. As you guys can see, we've been pretty crazy with this. But the two accounts we have here is the first one we have is a personal account, and that's $4,702. And then we have the TFSA, which is $30,000, almost $31,000. So we'll take a quick peek at these portfolios and how they've grown because it's important to show that growth. Over the past day, we've seen a little bit of a jump in the stock market this morning, it looks like. Looks like we're up 1%. And over the past week, I think we had a bit of a dip here. Yeah, so we can see a bit of a dip here, negative 0%. So not much really happening, you know, a little bit of gains, a little bit of losses, a little bit of gains, not a big deal. Over the past month, the portfolio is up 3%, which is pretty nice. We've seen a little bit of growth there. Over the past 3 months, the portfolio is up 7%, which is almost $2,000, which is really nice. Over the past year, the portfolio is up 17%. Once again, just pretty consistently growing on a regular basis. And then all time, the TFSA, you guys can see here, the growth has been pretty steady, up about 17% once again, which is $4,531 over the past year. And I'm going to talk about one of the big aspects of why this portfolio is doing so well. And even though it's a dividend-based portfolio, one of the aspects that's making the portfolio perform so well is we've seen lots of stock growth inside the portfolio, and we also invest in the dividend growth-based stocks. So if we go to the personal account, once again, it's pretty much the same thing as the TFSA. It's just been a little bit, it's not as old, so it's a little bit going to be a little bit different here. So over the past day, it's down negative 1%, oddly enough. Over the past week, it's once again down negative 1%. Over the past month, we're up 1%. Over the past 3 months, we're up 2%. And our all-year return is about that 2% range. And keep in mind, this one is a lot smaller, so we don't have as much growth. So it's going to be a little bit more can't even say a word, susceptible to can't talk today, to the big swings in the market there. So that's kind of what happens with a portfolio. It's a little bit on the newer side. So for this week, I have $268 to put inside the portfolio, and the stocks I'm going to be focusing on today, I'm going to be focusing on growth-based dividend stocks. And I'm going to be looking at stocks that have, you know, the growth factor of stock depreciation, and stocks that have the dividend growth over time, and stocks that have some pretty good decent yield. These are kind of like the middle range stocks that I'm a big fan of. They're kind of like in the middle. They're not growth stocks, they're not high yield dividend stocks, they're kind of somewhere in the middle, and these are the stocks that I like the most. And we're also going to buy some ETFs because I do want to keep building my ETF positions, and our two main ones, we have our VDY and VFV. So the first share I'm going to be buying is I'm going to be buying one share of VDY because I want some more US stocks inside the portfolio, or sorry, VFV. VFV is our S&P 500 fund inside the account. So we'll pick the personal account here and buy 1 share of VFV. We'll stick that through and place that order through. And then the other stock I'm going to be focusing on is one of my favorite stocks here. We'll just go back. And you'll notice that there's some other stocks here that are down quite a bit. So Algonquin Power and Utilities still hasn't recovered a tremendous amount. It's still down quite a bit. That might be one to take a peek at. Manulife is definitely down quite a bit, negative 8%. That had a big dip recently. So that one might be once again a stock to kind of take a peek at. I mentioned this in my last video, and it looks like it hasn't had a big recovery yet. So maybe take a peek at that. Another stock I would be looking at is TD, and that's the one I'm going to be focusing on today because once again, it really is such a good stock that consistently is growing in stock price, is consistently growing in dividend yield, as in dividend growth of the company, and they have a nice little yield to begin with. So this is one of my favorite stocks, and over the past 5 years, TD is up 55%, and a lot of that is coming from stock growth. So I'm going to be putting some shares into TD today. We have $175 left, so I think I'm going to put we could put 2 shares. I'm going to buy 1 share for now, and then I think I'm going to put the rest of the money into maybe VDY, which is our Canadian based ETF. So we're just going to put that share through there. That'll go through with Wealth Simple Trade. And then the last little bit we're going to be putting into VDY, which is this little fund here, the Vanguard FTS Canadian High Dividend Yield Index Fund. And this has just been performing pretty well. It basically tracks most of the big Canadian based ETFs, big Canadian based stocks. And over the past year, it's up 37%. Over the past 5 years, it's up 37% once again. So pretty good ETF with a nice, good monthly dividend yield. So if you want like monthly dividends on a regular basis, this is definitely one of those ETFs to look at. It's also super low fee, which is really nice as well. So we have $88. So I'm going to buy 2 shares, I think, of VDY, and we'll put that through here really quickly. And that's going to be the stocks I'm going to be buying today inside my Wealth Simple Trade portfolio. So if you guys kind of see some of the stocks inside my portfolio, and when you focused on the stock we talked about today, which was TD, one of my all-time favorite stocks, you'll notice that the big thing that these stocks have that a lot of other dividend investors, especially ones I kind of noticed on YouTube, the ones that focus on the high yield stocks, and I'm going to talk about that in a second, but you'll notice that they really focus on these 3 things. They focus on dividend growth over time, so a company growing its dividend, companies that already have a decent dividend established, but also companies that are constantly growing and they have stock growth. And I think the stock growth aspect of things is something that a lot of people don't consider. Even if you're a dividend investor, you're investing into more higher yield companies, you still want stock appreciation, you would still want stock growth, because at the end of the day, it really does add up a lot in terms of a return of a portfolio. And I was watching a video recently, and I'm not going to call out the person who was doing the video, but they were basically comparing 2 stocks, one that was a REIT that was really high yield based, and one that was a more of a low dividend yield growth based stock, and they completely ignored the fact of the growth of the 2 stocks. And if you looked at the all-time returns, basically the low dividend yield stock massively outperformed the REIT in the long term. And when it comes to investing into dividend stocks long term, I think it's so important to have a portfolio that's constantly growing over time. You don't want to start a portfolio and be living off your dividends if every single year your portfolio is shrinking and shrinking and shrinking. That just doesn't make sense to me. So when you're picking stocks and whatnot, and you'll notice how I kind of build my portfolio, I like to focus on stocks that have good dividend yields, good dividend growth, but also the stock appreciation and stock growth is such an important aspect of it that I think a lot of people just kind of forget or they don't consider. And if you look at the monthly dividend income of the portfolio, we can see here that this portfolio is focused, of course, on dividend growth. And it's not that much money in the beginning, of course. As you guys can see here, it's been really, really small. It's just a couple bucks. And it is true, if you have stocks that are more growth focused or growth that are a little bit lower dividend yield, it's going to take some time to get those dividends coming in and to maybe, be making big bucks with the dividends, but it does add up pretty quickly. As you guys can see here, the income has been slowly growing. And here's a cool little graph here that's going to give you guys an idea of how those dividends do grow over time. So, the first couple months we were making $5 a month kind of thing, $10 a month. And then we hit month 6, where we went up to $20 a month. And then month 9 put us at $50 a month. And it's just been a slow increase. And then month 16, we finally hit that $100 a month. And I know it sounds really weird, It sounds really weird that it took us that long to get there, but it does grow and it does compound. And although I might not be able to live 100% off the dividend income of this portfolio, I can definitely kind of make my life easier, because $100 at the end of the day per month can pay for a lot of things, especially if you're frugal with your money, and that money will just keep growing over time. So that's the dividend chart, so you guys can see how the portfolio has been growing. And our total dividend income for the portfolio, if we add all the months together, is $632, as you guys can see here at the bottom here. So it's, once again, it starts off really slow, but with the dividend growth-based stocks, that those dividends do add up. But keep in mind, most of the growth inside the portfolio is coming from stock appreciation, and that really makes a big difference at the end of the day. In the video, I'm just going to answer a question by a viewer who posted on my last video. So let BS, I hope I'm saying that name correctly, sorry if I mispronounce that. They say, hello, I have a question regarding the MER or management fees on the ETFs you hold. And Wealthsimple, is the MER fee deducted from the dividends paid out, or do we have to go somewhere to pay for the MER fee? So the management fee or the management expense fee is basically automatically factored into the fund you own. So for example, if you go over to VDY, and we take a peek at the website, at the very top here, we can see the management fee of the portfolio. So this MER is going to be the final fee that you pay, and that 0.21% is going to be factored automatically into the NAV price of the ETF. So this basically means that they're going to kind of factor this in automatically. You don't have to do anything. It's already reflected in the price of the ETF. So basically, you just hold the ETF, and on an annual basis, they will take the percentage out. So there's nothing you really need to do. It's not going to be taken out of your dividends or anything like that. It's just automatically done. Now, when it comes to fees, I know fees are kind of an interesting topic, because a lot of people, I feel like it's important to consider fees for sure, but a lot of people get too crazy about fees, or they get too they think that, you need to reduce your fees to be the lowest possible. Now it depends. If you can pick up a good fund with low fees, that's always a plus. But if you can get even just a cheaper fee, it makes sense at the end of the day. And if you're investing into a lot of ETFs, or if you're buying stocks yourself with Wealthsimple Trade and you're not using a robo-advisor service, you're most likely going to have some pretty cheap fees to begin with. So if you can reduce your fees to a decent degree, like maybe it's like a 0.2% or a 0.5%, MER or management fee or something like that, that's pretty decent at the end of the day, and that's pretty good for most people. For most people, you need to watch like some of the banks. If you're using a financial advisor or something, they may charge like a 1 or 2% fee, and that's when you're kind of looking at it, okay, that's a little bit on the higher side. Or if you buy a fund that's like a 1% annual fee or something like that, you just kind of want to pay attention to it, because over time it does add up. But if you're investing into a fund like VDY that has a 0.2% fee, that's really not that much at the end of the day. Or if you look like a fee like a dividend ETF, or sorry, a US growth based ETF like VFV that I have, the fees are pretty much non-existent. So if you can get an ETF with super cheap fees, that's great and that's awesome. It's icing on the cake. But at the end of the day, just make sure your fees are kind of not super high, and you're going to do fine. And I think that's the most important thing, especially if the ETF just has good growth. I think that's the main thing to focus on. Alright guys, so that's it for today's video. I hope you guys enjoyed it. Let me know what you guys think in the comment section, if you guys have any questions or anything like that. And thanks for joining me for this week's update. I'm probably going to be posting another update next week, so if you guys want to see how the flow is going to grow next week, be sure to subscribe to the channel. So other than that guys, take care, have yourself a good day, and I'll see you guys later.